Good morning, everyone. Hey, I'm listening. What's going on? Just trying to get this. Ah, there's the YouTube. There we go. It wasn't letting me stream. Hey, good morning, good afternoon, wherever we find you this morning, this afternoon. Hope everyone is well. I'm JJ, and you're joining us at the tradingsyndicate.org. Hey, Tim, Lear, Mother Truck, how you doing? Well, apparently the U.S. government is shutting down, and the market really doesn't seem to care. Hey, Jerry, what's going on? Sorry. Uh, you had some nice moves, right, Mark? Had some nice moves in Globex. How you doing? Oh, I just my saying going forward is going to be just listen to the chart. Holy cow! I'm telling you, holy I people were sending me articles on shutdown and how we were going to gap down and all of this stuff. Hey, which still might happen, right? But you know, the market. What's keeping this market up? A lot of duct tape. Mark, there is, sorry. I, the, hey, it was there. I had to take it, right? It's like you threw me a nice softball right over the middle of the plate. I had to swing, right? I have no idea what the shutdown is. I'm a Canadian citizen and I'm visiting the UK. I did live in the States in 1987 and 88. I did take political science, but I have still no idea what a shutdown is. Basically, they ran out of cash and they're taking a little dirt nap. Okay? So the reason the market doesn't go down is because the shutdown is temporary and all the money managers who are trillion-dollar institutions own hundreds of billions of dollars worth of stock and trillions of dollars worth of stock, which they're holding for 40 years. So the shutdown might temporarily affect earnings, but most probably it'll get solved. And somebody was writing in the room, the 2018 shutdown, market went up. This market is built to go higher. It's not built to go lower. And there's videos on my YouTube page which explain it in detail, right? So you got to really pay attention to the chart because the chart will tell you everything. Good day, Dan. You hoser. Oh, that was a classic movie. So, what did we do? We had a look below and fail of yesterday's low. Yeah, Yeah, there's so much money that comes into this market, just gets parked. People buy stock and they warehouse it. So what happened was, as soon as we cracked yesterday's low, all those short sellers who were caught down here, and for God's sakes, the shorts have been trapped. You want to see where they're originally trapped? Here, check this out. Okay. You got short sellers trapped in gaps that never filled from way back here, right? And every time this market dipped like that, you got shorts trapped. So every time it liquidates, it comes right back to position. And then right back up. Right? Big liquidation. New highs. Liquidation. New highs. Liquidation. New high. Liquidation. New high. Liquidation. New high. Right? If you want to be a short seller, be a hit and run short seller. Get in there, short, get out. Because it's not going to be a fun ride holding on to a short. Okay. So everybody thinks we've got a material change, right? And actually, my girlfriend was talking to me yesterday. She's sending me all these articles on the shutdown. I was starting to get nervous. I thought we were going to gap down 200 points. Then I woke up this morning. I looked at the market. I went, oh, okay, it's selling off. It was selling off nicely. And then we came underneath that previous day low and then consolidated for a while and then straight back up. It's been... I told you guys it was going to be a challenging market to trade this year. Going into the end of the year, right? I told you it's going to be challenging. But, here's the good thing. If you know what you're doing, right? If you know what you're doing, it can be extremely lucrative. So, my job is to take you from sheep to wolf. Okay? So you're going to learn what to do. You're going to learn not to take stupid trades. You get profitable and you're going to get paid. Okay? Right, that is what we're going to do going into this quarter. We are going to get paid. Right? We've done a lot of work this year. We laid a good foundation. Now is your turn to take that foundation and turn it into cash. Okay? Hey, Joe, what's going on? Right. Hank, I sent you that video just now. That's how you think when you make a market. You see how that guy laid it all out? That's how, Hank, we are trained to think. Right? So, how do we trade it? Well, the good news is we are inside yesterday's range and we are inside yesterday's cost basis. So after all of this drama, no change. So it's going to be choppy until we either take out yesterday's low or yesterday's high. There you go, Lear. Sellers at 15, bid 8. There. You're ready to go. Your sellers are here. They stop selling around 8 right now. Just trade in between. Let's go take a look, dig in, and get to work. Overnight point of control was down here, under 66.86. We've taken that, moved it up here. Good distribution. Right, this market came right back into cost basis. Right, just where it was a little thin, straight back up. There you go, Hank. Data at B open. Thank you. We just go get the stops in place. Lower stops. We have some single prints just up here. Overnight inventory is short. It is corrected a fairly decent amount. A true correction to overnight inventory will take us up to 67.24. So keep that level on watch. That's the close of yesterday. For now, I think we're just going to trade like this, back and forth, while the market waits for more information, right? Because it is. Hey, Rosemark, how you doing? Rosemark is asking, why does this feel like another short squeeze? Because it is. You should be. Short squeezes should be your best friend now, Rosemark. Right? Right? That's the title of my new book. The Short Squeeze in You. Coming to grips with a market that has no supply. Or just get long. Close your eyes and go long. Right? That's Ray's favorite saying. He was actually saying that 5 years ago. Just close your eyes and go long. You know? Why fight it? Why fight it? Throwing money around on the streets. Pick some up. Okay. Now, let's go take a look at our 1 minute candle chart. And see where I redid the balance zones. So what I did was I had balance zones that were up here. I don't know, 60. They were up here earlier. Then when the market dipped, I redrew my balance zone. 66.84 to 89 and 3/4. Right? Got a big range, so zone's a little bigger. double it to 67.01, double it again to 67.24. And those of you who weren't in the room, I had this graphic up earlier. Show you guys. So, in these markets, what happens is you see all this volume up here? Those are trap logs, right? We sell them all this worthless stuff. They liquidate, right? Then we get that big liquidation. That inventory is taken into wholesale hands. Short sellers come in and start buying. Wholesalers build a position on top of shorts. Market goes up, and then we distribute. That distribution, right? That distribution, what that does is creates price stability, draws in buyers, right? And so on and so on and so on. And then it takes it up to another distribution. So that's how a liquidation works. It's pretty simple. Right? Oh, we just go get the chart set up here for the morning. Make sure VWAP's in the right place. VWAP is at 3. We got our sellers are right there. There. Yeah. Good. Ready to go to work. Trades off the open. No. Market makers do not manipulate liquidity. So what they do, the thing is, Black Swan, they don't have time to trap participants. Market making is such a large business now, and it's consolidated amongst larger and larger players, right? Hang on, let me just type this out. So market making is a multi-billion-dollar business, okay? Right? Those stories you heard, does that make sense? So that information about, all the information you hear about market makers that you guys are reading on the internet and Twitter and all these places, that stuff's like 30, 40 years old. Market making, what did Jane Street, what did they clock, $16 billion last year? Trust me, they don't have time to worry about your stops, right? They don't have time to influence or trap participants. The markets are moving so fast and there's so much order flow and there's so much money at stake. People will trap themselves because of stupidity, right? The nice thing is, right? Right? Market makers, they don't have to influence or trap people. People do it all by themselves. Right? But the thing is, Black Swan, how does this help you make money? Right? Now, the major question is, Get it? You guys know what I'm saying? That's why I have that area, the JJ commentary. You can ask all of these questions in this area. I started this up. Hope that helps. Anne Marie, how you doing? And you are right. The problem is there is so much information. I mean, I read 3 financial newspapers every day. But that's just a habit. And I've been doing that. Well, Bloomberg's not a newspaper, but um, I've been doing that for 30 years. I've been reading the Wall Street Journal every morning. Even before it existed on the internet. So that's an old habit. But do I use it to actually trade? Dear God, no. Do I read the news and use that to trade? Oh my God, no. There's no way I can put an execution plan around a news headline. So how do I do it? Well, I use inventory and cost basis, right? I use inventory and cost basis, and that's the only thing I can do, right? And I watch the order flow. Like, look, here, right? Inventory has corrected upward, but check this out, folks. We've got a pretty aggressive seller here, right there at 10.5. And do you see how the seller stepped down? They were up here, then they moved their offer here, then they moved their offer here. The top of the candle is the offer that induces, right? Anne Marie, this quarter we're going to do some cool stuff in the room. We'd love you to join us on the Zooms. Yeah, see, I started this. I started off in this business and was taught by people from the 80s and the 70s. Thanks, Anne Marie. Yeah, we'd love to have you. Get your commentary. And so, yeah, I did the same thing. You know, it was like a ritual. You go buy your Wall Street Journal, get a cup of coffee, go into work. It was a beautiful thing, right? Good memories. But to trade retail, yeah, right? To trade retail, we need to know where the seller is. So if we're shorting, right? If we're selling, right? We need to know where that seller is because if we're selling 8, 9, right? And that seller at 9 leaves, and the market regains 9, we got to watch out, right? So we are correcting inventory back down after a distribution. Did I wear a suit to work? Of course, right? So I shorted 7 3/4, covered 6 1/4, right? One at 6.5, 1 6 1/4. I got one left to cover, and see if they give me any love at 6. I'm flat, right? Yeah, man. I had like 30 dress shirts and a bunch of ties and a bookcase full of books. That was my furniture, right? Yeah, every Sunday night you iron your shirts, you get ready, you polish your shoes, right? Yeah, you don't. Market makers don't need to trap people, man. They'll trap themselves, right? Yeah, I had this whole Sunday night ritual, you know. You shine your shoes, you make sure you're ready for the week, go into battle. So you find a seller and you sell alongside. That's how you trade to the short side, right? I'm late, right? I hit 7 3/4 and I covered 6, but I should have been hitting it here. When I saw this, when I saw that seller come down, I should have gotten short here in the 9s and 10s, had my stop here, and covered 7. That would have been better execution. Yeah, you guys in the phone rooms had it a little bit. And Miami, nobody wore a suit to work in Miami. I mean, that's true, Tilt. You and I have to have we have to have a chat one of these days. I am sure you worked for a lot of my clients back in the day. Were you in Boca? Yeah, the guys in Miami and the guys in San Diego, they never wore suits. It wasn't that hot in Vancouver. All right, off we go. I'm looking for my seller. Oh, seller's still there, 10.5. Howdy do. Oh, Fort Lauderdale. Oh, geez, I think I know who you worked for. We'll have to compare deals one of these days. A little choppy here. If we can't get underneath the open, uh, let's see. Yeah, you got to go long, right? But there's your out. You know, if it starts breaking 6, be careful, right? If you're long and it starts breaking 6, be careful. And you've got a seller at 10. So, boom, yeah, went long 7.5. And I got one left out at 10, right? So I saw that I was really wanting to short. Had to go long. Had to go long, right? I couldn't get under the open, folks. That's a sign, right? It just couldn't get under the open. It's going to turn and do that. Inventory is short. How many people do you think are trapped short from 8 to 13? Take a guess. Let's see if we could get through these 18s. There's 18 1/4. And sorry, 3/4. Right. Overnight inventory is still short. Until we go tag 67.24, inventory is still short. It's about 85, 90% short. I'm not sure. Maybe 90 is too much. Jam, where are you? Has anybody got that software open? We got distribution happening now between 17 and 18. You don't have it running? Okay, no worries. Single prints are filled. We ran out of supply, folks. Right? We're getting close to the close. Right? I'll expect a seller up at 24. Right? Look how thin the volume is on the way up. Do you see how little volume it takes to move a market up when the supply is underneath? Do you guys see that? You don't need to move a market higher with a lot of buying if you've got all the supply. Oh yeah, you just got to breathe on it and it'll move. Hey, nice work, Rosemark. Whisper sweet nothing, and the whole thing will move. Right? All the supply is really under 67.15. Look, this is now I sold my long way too early. Okay, because I was flapping my gums. Right? I sold my long way too early. But this is the trade that you want off the open. Inventory is short. What is the first order of business? Shorts to come in and cover. Tim, we've had weak structure since COVID, my friend. Weak structure is when you have very big ranges, gaps. Tight structure is when you have a week or two or three of very tight ranges where you can see accumulation by investment money. Right now, there's no investment money in this ES market. This is a speculator's market. So the structure is weak. The ranges are big, right? It's a gunslinger cowboy market, this is, right? Let's look at the range. 67.23 to 67.06 right now. But the overnight high was what, 30 and change down to 66.80, right? Big ranges, which means people who are sophisticated and have a lot of scratch, right? They're making huge money. You'll look at those partnerships and prop partnerships. You know those cats who are managing in that sweet spot between maybe 400 million to maybe just under $1 billion. There's going to be a lot of those folks making a lot of scratch this year, right? Because they're slinging 5,000 contracts, 4,000 contracts. They're trading big size. Hey, G-Man. That's right. Nice trade. 9 to 15. Beautiful. Beautiful. Right? 9 to 15. That's 6 points. If you did 6 points on 10 contracts, right? Then you can go to Disneyland. Does not take much. Right? Let's see if we can move that point of control up. The nice thing about the ES is it's scalable. It's scalable in time and size. Once you know what you're doing, right? The the trades are the same. You're just holding them longer or putting on more size. Either way, once you get comfortable with the trades and you get some consistency and you learn how to control risk, you're good to go. Right? And as usual, I mean, if like anything else, if you start getting out of hand, scale it back, right? You know, if you start trading a bit too much size and it starts going against you, just cut contracts, cut risk, right? And then what we have in my room and what I teach the people in my mentoring classes are you have to develop the skill to cut contracts when you're in trouble automatically. So it becomes like a habit. There's the close. Right? We've got 3 stops above us up to 27. 24 and a half is not really holding us down. So now we are in 4 times cost basis, right? So 1, 2, 3, 4, and then it'll go into 8 times cost basis. Now, there's got to be a seller somewhere. Let's see. I'm going to wait for the next candle. This might be a look above and fail of 24. In which case, if we could stay under 24 and a quarter, I'll think about shorting this. Yeah, dang it. Nope. So much for that idea, right? That's why I wanted to wait till this candle, right? I could have shorted it there, and then I would have gotten stopped out automatically, right? There's a stop run first. If we accept over 24, then you're looking for what, 27 and change? Yeah, 27, 27 quarter. Yeah, this is classic, right, Millad? Right. I logged 25 and 3/4, out one at 7 3/4, offered at 8, out one at 8, out one at 8 half, flat. Yeah, no kidding, eh, Raj? Jeez. Thanks, Dad. We got everybody short. If we could stay above 24, 25, we're looking for 33 and a quarter. But now news is coming. What, in 5 minutes? Ugh, I hate news. I don't want to take a trade right before the news. See, Howard, see what happens when you get everybody short, Howard? Right? Everyone's short under 15. Everyone is short under 15. Everyone. Everyone is short. This is not a good market to short. It is not a good market to short. Not a good market to short. It's okay to short it on a short time frame, on a quick time frame, but don't stand in there beating the hell out of this thing because you're going to get eaten. Howard, it's really simple. Howard, you got to find a seller. Ask yourself every time you want to short, go, is there a seller? Just ask that question. You ask me questions all the time. Go to me. Why don't you just DM me when you want to short and say, hey, JJ, is there a seller? Try that. Now, I'm looking for two-sided trade. Let's see. I'm going to try. if it stays under 24 and a quarter. See you later, brother truck. See, it's not staying under 24 and a quarter, this stupid thing. See, look how quickly they came in. See, every time it goes under 24 and a quarter, I'm thinking, oh, great. I can do a look above and fail short, right? Now, nope, nope, nope. Yeah, numbers, right? Ooh, point of control moved up. Good distribution here, right? So that's what you should do, Howard. That's why every time it goes down underneath, right? See? Look below and fail of 24 and a quarter, right? Look below and fail, right? Once again. But that told me, right? That look below and fail is telling me, okay, there's no short. Go long, right? Now, let's see if it holds 24 and a quarter so we can maybe go long. If it doesn't, then it's just going to chop around. Maybe it'll distribute up here. Let's see. Watch now. Let's see if there's a seller at 24 and 3/4 or 24 and a quarter. And if we have an inventory correction and you are shorting it, well, it's got to get past this 21 quarter. It's got to stay under 24 quarter, right? First place I'd look for a cover is around 20, half, 19. Right, here we go. Here we go. Can we cover some here? Right? Buy them on the way down, folks. Buy them on the way down. I'm short 22 and 3/4. Covering at 20 and 3/4. I got 6 left to go. I'm just 20 and a half. I'm flat. It took me a while to get that, right? And you saw that in the early morning where I took the short, got stopped out, had to wait, you know? There's 18.19. You should be flat if you're short 22. Make yourself 3, 4 points. Done. You're gonna. I short always too early. Happens to me all the time. So you're waiting, and they catch that second bid here. You know, that's okay. Right back down to cost basis. Nice, right? So first order of business, right? Correct inventory. Sell it back down to cost basis. Now what? Back and forth? Let's see. See ya, Tim. Now what? Shall we go lower and test this 6702? What do you think? Right back to VWAP. We're under VWAP now. Okay. Now, let it sit for a bit. Oof, what a bid there at 10. Right? There'll be sellers around 14, 13. So what do we have here, ladies and gentlemen? We have, as the King of Queens would say, a rotation. Right? You got a big rotation here. If that holds, that'd be nice to trade that for the rest of the day. I could trade that back and forth. 7 to 28, I'll trade that all day. Like ping pong. But before we get ahead of ourselves, or before I get ahead of ourselves, right? Nice trade, Taco. Nice trade. I love range trading, right? It's like, what is that game? Oh, yeah, you guys are all into that pickleball now, right? Just back and forth like tennis. Tick, 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 tick. I love range trading because the risk is known, right, Anne Marie? It's just like, we know where the edges of the playground are, of the sandbox, right? Don't go too far this way, don't go too far that way, right? Just take it and go run back into the middle, right? Exactly. Hmm. Your trading range turns into some sort of diagonal channel. Huh. I've never encountered that. That's how do I protect myself? Rosemark, I do the same thing every day, right? So every day I look at where's the inventory, then I do my balance zones. This, right? So I do my balance zones, right? So there's my cost basis, then I double my cost basis, and double it again. So that way I always have fixed references. See what I mean? When I call out a level, it's a fixed level. Like 67.01 and a quarter is not going to change ever, right? And it's like I was saying yesterday, the only reason I've been able to get anywhere in retail trading is from routine. And the routine is what saves me. You know, the thing about routine too is it helps me with my risk. Because if something falls outside of my routine, then I'm out of the trade. You know? Okay, what you mean is when price breaks out of your range? I never trade breakouts. So this is what I do, Rosemark. Right? I'm a simple dude. Right? So say I'm trading this range. What I do is when the price goes underneath and comes back up, then I go long up to the top. Right? That's it. If the price goes up and then comes back in, I short, put my stop here, and cover here. Very simple. I don't trade breakouts because as a professional trader and a market and making markets and selling supply, you're taught to sell into breakouts. Right? So I don't buy breakouts. That helps. Then you don't get faked out. So the trade I'm waiting for now is the look below of 67.01 and fail. And that's what I'm waiting for. I won't mess with this. I'll leave that alone. Does that make sense? If it breaks above 67.24, right? Depends on the price action. Right? A lot of times a 1 minute is enough. If it's really slow, you might have to wait a couple of minutes for it to hold that level and then go. But there's a clear and specific business reason for the trade. The other thing is when you're taking trades, see now we're looking for rotation, right? So had we drawn that box, like remember I said there's a rotation? Let's go look there, maybe there, okay? So what you do is you take, there's the look below and fail of this level. So you're long, you stop, and you sell into this strength. Now you're looking for 24 as your next target. See what I mean? It's very simple. It's not easy, but it's simple. So in this case, it was one candle. What do you do if it breaks out of your range? Have a coffee and chill. Who cares? Who cares if it breaks out? If it breaks out, wait till the next range and then see here, let me put it into context. Okay. So say it breaks out of this range here. Right? Just relax. Right? Say it's in this range here and then it breaks into the gray zone. Wait till it comes back, breaks under 24 and then does this. Or don't trade. Wait till it gets to the top and does a look above and fail and maybe you can take a short. You're going to trade less doing it the way I do it. Right? Right? The look below and fail is based on a very simple thing. Right? The look below and fail is Sell orders take the market under 67.01 quarter. Those sell orders are completed. The market comes back up over looking for supply. You grab some supply, and as the market goes higher, looking for sellers, you sell into that move. There's a business reason, so your stop is here. If the market takes out 67.01 and a quarter, the business reason for your trade does not exist. Therefore, you and your capital are gone. Thanks for coming out. Drop by the room maybe for a month, Rosemark. It'll help you. We go over this every single day in detail. A little top tip. Learn how to go long before you start shorting. It'll teach you how to be a better short seller. Guaranteed. The best short sellers I've ever made are distributors. Why? Because they can recognize competitive selling. And if you can recognize competitive selling, right? Like I was telling Howard, if you can recognize that competitive selling, you're way ahead of the crowd. Way, 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 way ahead of the crowd. Because you know when the sellers are going to step in. Yeah, no rush, Rosemark. Markets are always trying to find the buyer, my friend. That's why it's a market, right? We're always trying to find, we want to sell you, right, our inventory. Yeah, the markets are always looking to find, not inventory, buyers, right? Not, right? We're trying to find buyers. We have supply. You have cash. We are going to exchange your cash for our product. Then when you get sick of holding our product, you're going to sell it back to us cheaper. And then we're going to buy it back, and then we're going to sell it higher again. You guys, you know how the used car business works? It's the same thing. All we're doing is pushing inventory around. You guys buy it, we sell it to you. Then you go, wah, I don't want to hold this anymore. We buy it back cheaper. Right? And then new people come in. See? It's like a conveyor belt of customers. Sometimes that conveyor belt is moving slow, so the market will be in a bracketed range like we're now. Sometimes the conveyor belt is moving quick. Markets are always looking to find buyers. Show me a bid, my friends. Right? You know that song by Neil Diamond? Love on the Rocks Ain't No Surprise? Well, we used to say, show me a bid and I'll tell you some lies. Right? We just want to sell. All we want to do is sell. Right? Show me a bid and I'll tell you some lies. Right? I'm talking to you. All I'm doing is I'm sniffing to see where your wallet is, like a dog. Where's the wallet? Is he opening the wallet? Right? Go find the bid. My whole life is finding the bid. Exactly. You know, I'm like a truffle sniffing pig except for bids. Yeah. You guys need to watch The Offer. Right? But I've always been a seller, right? I've always been a seller. I've been a seller all my life. Ooh, let's see. Speaking of sellers, let's see if they step in at 67.20. Uh, let's see what's next. See, just creeping over that 20. We just need to find a nice back and forth. It's a big range, folks. Okay. So far, we got a nice inside day. Right? Just got a nice inside day. No stress. You know, it's the market will go back and forth and back and forth. Pieces of news will come out, right? News will come out and they'll try and scare you into this or get you greedy into that. Just stick with your setup. Where's Jam? One of our guys, Jam, right? Jam, I want you to tell the people how well your trading has been going since you blocked out news and all that other crap. Where are you still here? You might have gone back to work, right? Over the last week or two, is one of my buddies in our room here. His trading has gotten so much better because he just blocks out all the news, right? Because before he'd be like, "Oh yeah, this is gonna happen, and this is gonna happen, and that," and then you know, it would just bias you. This way, you just block it out, right? Just watch the chart. The chart is like when your girlfriend or your wife is trying to give you directions. Just listen to it, the chart, before the days of GPS. So what's going on here, folks? Let's take a look. Looks very, very... See that? Just basically going back and forth between 96 and 67.30. Market's waiting for new information. Remember, it's the first of the month. Got all this news. this government shutdown. Earnings are going to be coming out. Brand new quarter. They might bring back the McRib. All of this news, while important, right? The McRib being the most important. Just focus on the chart. It'll save you a lot of gray hair, right? It'll save you a lot of gray hair. Right? And hey, Had Marie, how's this for marketing? For you ladies out there, reading too much news and getting stressed out causes wrinkles. So don't do it. Just watch the chart. Right? Just chill and watch the chart. Don't let this market age you. I'm curious about today's low. I mean, we've only been open for like 40 minutes, not even 45 minutes. Louis with low. I guess guys can care about wrinkles too. I should get with the program, Louis. Right? It's the new woke age. So yes, people care about wrinkles, not just ladies. Right? Too much news causes wrinkles. Yeah, I don't know yet, Raj, whether I want to build out a new balance zone. I'm going to err on the side of laziness for now, just because it's the first day of the month. You know me, the least amount of effort required usually tends itself to the best results. Right? I find my laziness has really helped in retail trading. It's kept me from taking a lot like of over trading. They're like, should I take that trade? I don't think so. Oh, it didn't work. Okay. But no, seriously, the ability to sit and watch has really helped me. Just like little subtleties. And the nice thing about trading the way we do, where we trade just at the edges of a zone, is a lot of times when it's doing stuff like this, I'm not even interested in taking a trade. My hand's not even on the mouse. Being in a trade is the last thing on my mind. What am I looking at? I'm looking to see if that 67, 20, half, 21, 67, 20 and a half, three-quarter seller. They're still there. They're not aggressive. They're starting to creep the offer a little bit. Let's see if we can get up and print the 22, 22 quarter area, because the next place we're going to have a seller is 23. The SEC will have limited staff during the shutdown. I think they barely have anyone over there right now as it is. I think your president gutted the SEC. It's like, yeah, don't need that. Sorry. It was there. I had to take it. See how the seller is at the top of those three candles? See how they're slowly creeping the price higher. Slowly, slowly, slowly. You're looking for the close in that 24 again. This is the worst kind of price action to short because it looks weak, it looks tired, and then it just keeps creeping higher. See? Look. It's so annoying. As a short seller, this is the most annoying kind of price action there is. Yeah, I am not an expert in government shutdowns, that's for sure. See, look at that creep. See how it just slowly, tiny little 1 minute candles, and you think it's going to fall apart. But just at the last second, the offer lifts. These algos are really good. Yeah, somebody said that earlier, right, Leslie? Last shutdown, wound up 10% because probably everybody went and shorted it, and they created another short squeeze. Think about how many people are short under 67.15. People who were shorting pre-shutdown, shorting in the overnight, now they're trapped. I have a question. Do the people who shut it down, do they still get paid during the shutdown? Or do they stop getting paid? Like all the congressmen and senators. They still get paid? Not during. Okay. Because that wouldn't be fair if they shut it down for everybody else and they pulled a check. Oh, okay. Oh, okay. Thanks. Good clarification. It would stay shut down, probably, Anna Marie. Oh, what a world. Hey, it was just a question, Rosemark. Don't get me started on government insider trading. Oh, yeah, exactly. Creeping up on 24 and a quarter. Oh, we did hit 24. Okay. We hit the close. Okay. Look at the difference between this move and this move. Wow. Look at that. It was like one massive candle. And then it's just been creep, 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 creep. Totally different types of order flow. Oh, glad you saved yourself on that one, Colin. Well done. Back up over 24 and a quarter. You can't keep a good market down, can you? All right, if we take out the A high, you're looking for the overnight high. Another algo creep, right? Jeez. Got these algos on lock, I tell you. Although I'm sure you, where are my 0 and 1 mafia guys and ladies? I'm sure this stuff is like self-learning now, isn't it? These algos. Overnight high first, then prior day high. Those are the next structural stops. And here's the thing. Check this out. So if we get over the overnight high, you guys see that that's the only inventory that's left, eh? So you've got, I want to show you guys what overhang means. That's overhang. That's overhanging supply. There is no overhang up here. There's nothing up here. Nothing. Nothing. There's nobody who owns ES at 67.85 that's going to come in and sell it. So that is all. If we can creep up over the overnight high, right, we are going to go into a big distribution zone up here. Beware of that, okay? So if we get, so large short sellers, if you're short here and it takes out 35.36 and it takes out the previous day high, be very careful, because if it gets over 67.45, right, all it's got to do is take out that all-time high and then boom, we're looking at 67.85. Okay? Beware of that. Yeah, I don't like the way this is looking right now. Not to be a worrywart, but what the hell, I am a worrywart. That's how clearing firms don't get blown up, is when you think. Paranoia, a little paranoia always helps, right? There will be, people will start getting bought in if we take out yesterday's high. Because nobody was expecting this. How many of you, just quickly, folks in the trading room, how many of you are around at 2 p.m. Eastern Time? I don't know, Leslie, but people do. Okay. I'm thinking of maybe doing a half-hour Zoom at 2 p.m. Eastern Time, which is 7 p.m. London time, 8 p.m. I'm thinking of doing one. 20 minutes, half an hour, just to see you guys into the end of the day. Let me know. I've asked it before, and I haven't gotten much feedback. We took the A high, but they sold into it. Quiet distribution again. One thing I did notice earlier, since we had that sell-off, since we had that sell-off, I've noticed that sideways movement has brought in buying. Right? That sideways price stability is bringing in buying. Let's see if it does it here, because that's what we're looking at above us. Let's see where all the inventory is now. We go and draw a volume profile. Yeah, there's a good chunk of inventory right here. Interesting. And even with bad news and a new month starting where you don't have to hold prices up, I think enough people shorted the market that we can hold price up here over 6,700 quite nicely. Yeah, be careful at the end of the day. I don't know. Let me know if that's helpful to you guys, because I just don't want to, you know, fill up airspace. The other thing too is on the left side now we have this JJ news and commentary where I'll comment on news articles. And yesterday I was showing you guys how the buy-in process was working. You know, that kind of thing. So I don't clog up the ES room. You can ask me questions about market making and all that crazy stuff you guys want to talk about. Yeah, I guess we should not be surprised by direction at all anymore, right? You know, what did the guy say in Reminiscence of a Stock Operator, the old turkey? Well, it is a bull market, you know. It is a bull market, you know. Isn't that a great book? Gosh. It gets better every time you read it, too. The more knowledge you have, the more experience you have, the more you reread it and you're like, holy crap, that's what he meant. Audiobooks. Yeah, I tried the whole audiobook thing. It was kind of cool. All right, we're still creeping along here, folks. I don't see a short yet, my friends. And it's that creeping drunk guy up the stairs. Will he make it? Will he not make it? Well, he's making it. That way you can drive and not crash. The book is Reminiscence of a Stock Operator, Edwin Lefevre. It was written in, I believe, 1931 or something like that. It's a book about the life of Jesse Livermore. It's a bit fictionalized. And I've been reading it now since the 90s when somebody first gave it to me. And when I first read it, I had no idea what the hell he was talking about. I reread it and reread it and reread it. And the longer I've been in the industry, things, as you encounter certain situations, it's like lifting the curtain off some of the things he says. And you're like, oh my God, that's what he meant. You know? Like when he was running those stock pools and they were backdooring him, right? And he found out that they were backdooring him and he just hammered the stocks. Took his money and left. Okay, now we have single prints, right, here. It's a little short position right there. Let's see if that fills. Gosh, this is a strange first day of the month, isn't it? Something wicked this way comes. Yeah, now that was when he was short cotton or wheat or one of those things, and he was long. Everybody thought he was short, and they came and tried to squeeze him, and he just sold right into it. Thank you. Shorts are definitely on the back foot. Don't read the news. It causes wrinkles. Okay, I'm done for the day. Thanks, everyone. Nice work. Well done, Hank. 13 points on the mini. Good. Now, shut her down and hold on to that money. Good. Well done. Beautiful. Thank you, everyone. Come visit us at thetradingsyndicate.org. We'll get you through the maze that they call finance. We'll get you profitable, and we'll keep you profitable. Thanks. Thanks, Emery. We'll see you soon. Bye for now. Trade safe out there.